So, we had one last topic, and this is tax. In the Jeff Madura book, taxation of multinational companies are completely missing, while at the same time, this class should be about international financial management, and even if this is taxation, still we have to pay money. So, and this is even more relevant because obviously we are trying to design a multinational company, so we are operating in different countries under different tax laws. Sometimes we can outsource some activities and or relocate some activities, and also we have this newcomer here in the institutional background, which is the global minimum tax, which was initialized 2 years ago, and they have to start report in this year. So I will also show recent developments. So this is completely ignored or completely missing from the book. That's why it's part of the lecture notes. So first of all, there are two key elements in this taxation topic. First is physical location, relocation of different activities, and the other is tax optimization. So when people are talking about offshoring, sometimes you have to understand that which one are they thinking about. The physical relocation of some competencies to realize the competitive advantages and practically instead of using robots to cut unit costs or automatization, in this case they are just moving some part of their production to cheaper countries, I mean with cheaper workforce, with tax benefits from the hosting government or something like this. And at the same time, these relocations, these changes can be also highly motivated by tax incentives. So the other offshoring is offshore taxation and tax optimization. So first of all, when the book starts, they are saying that if you would like to step on the market, we have different opportunities. So one is just exporting our goods here, so we are manufacturing everything at home, then selling our products and services on the global markets or foreign markets. Or if we are reaching some quantities, or if we are working on the retail market. So we are not just, let's say, if we are producing industrial machines for optical applications. So one of my friends was working for a company who is producing optical lasers. So there is this huge optics laser inside, and then they are just checking that the product that they were manufacturing is good or not good. So this is a diagnostical product, just they are maybe one of the three global producers. So in this case, they were manufacturing mostly everything in at the parent company, but after that they had to travel to their clients everywhere abroad. So my friend just traveled for a decade to different locations, on-site locations where there was a demand for not just the installation, but sometimes you have to calibrate these assets as well or change some components. In this case, since the product is so unique and also the market is really small, this is not mass-produced asset. So in this case, it doesn't relevant to manufacture it abroad. But if you are thinking about consumer goods like cars, which are big, but also valuable, but still their volume is big enough. So it's not like a phone or a mouse that you can package in and then within a shipping container you can send some big amount of supply. The biggest problem is with car that you have to insulate them, you have to secure them against corrosion and other water damages. So you can move them in cars or move them by rail, but but only for the high-end, high-value products. So sometimes it's much easier not just to realize this competitive advantage, but also to make the whole logistics way easier. So that's why it can be a huge motivation to open a car factory in a foreign market. Also, it can be incentivized by different tariffs. Obviously, what happened in case of the US car manufacturing business in the 70s when they started to raise tariffs against Japanese imports. So Japanese companies started to open factories in the US to manufacture the same cars and still be profitable and beat GM at home. So this competitive advantage thing can be different, or the motivations can be different. It depends on the number of the products. It depends on the physical properties of the product. Obviously, for a Netflix who is providing services abroad, they need just maybe some data centers. For them, the biggest bottleneck will be buying the different intellectual property rights, at least the licenses to provide access to the different content in each countries. So that's why in some countries Netflix can provide us a huge portfolio of movies, and sometimes this is absolutely narrow. Speaking about Stargate, which is absolutely not available in any kind of a platform in Hungary during the last decade. So, yeah, so offshoring became really popular during the 90s. So practically, this is when you are starting to move. So instead of having big, vertically and sometimes horizontally integrated factory monsters in one location, which was really popular during the second and third industrial revolution. Now they are trying to see that, okay, what are the core competencies? Let's keep the core competence at home. So, for example, Sharp, when they were big in TV manufacturing during the 2000s, they were just keeping they were manufacturing plasma TVs, so only the main screen component with the plasma thingy inside was manufactured in Japan, and the rest of these TVs were manufactured at 3 different locations. So one of them was located in Poland, near Toruń, and in this location they were putting all the things together, but they were manufacturing the motherboard there, they were manufacturing the steel frames, the plastic cover, and all the other things there. But still the most highest value-added product was still manufactured at home. So that's why we are talking about competitive advantage. And also sometimes people are trying to move production back to their home countries because maybe the previous management tried to outsource this, then after that they realized that they need much higher control on this one, or they were using the services of an external vendor and there was a reason why they were cheap. So after that things started to go south, so they had to bring it back. IBM did once this disaster that in the 90s they opened a PC factory in, I think it was in East Germany. So everybody was thinking that, oh, what will be the productivity there if it's worse to locate a completely retail market or consumer product manufacturing in Germany, and after that several years later they have to close it down because it was absolutely not profitable even at East German wages. So sometimes outsourcing, backsourcing can happen. It depends on the attitude of the management, it depends on their behavior. Usually if there is a slight change in the upper management, then they start again to relocate different parts of businesses, especially in service industry or service part of the company. Or sometimes it can happen just reshoring. So moving it a bit closer, but not that closer. So typical reshoring territory is Central and Eastern Europe, so all these countries around us. So Hungary, Slovakia, Czechia, Poland, Serbia, Romania, that many German manufacturers move just the production here, or they are not satisfied and also moving it back here because still this region is cheaper. So that's why we are the biggest car manufacturers nowadays, because everybody manufactures here. Then, we should not confuse this one with full outsourcing, when we are not just relocating the production, but also we are using the services of an external vendor, which can be mixed in many cases. So we can find examples when they are not just opening a subsidiary abroad, but sometimes due to local rules and regulations, they are forced to create joint ventures. So opening a joint venture with a local partner, and it's good for risk management, because if things are going south, then you can still just sell your shares, and then the local partner must deal with all the other losses. Or if regulations are really special, really strict, and you have no idea how to deal with this, then also it's really good to use local partner. In this case also it's easier to use local funds, so it can be also cheaper. But full outsourcing means that, okay, you are just giving this production, giving this set of services to an external partner, and after that you are trying to monitor what is happening there. Also, captive center. This is also a way of risk management. So there is the external vendor who builds the entire service operation from zero. They are owning it, and we are just giving them jobs. So they are getting all their projects from us. It looks nice. Boeing right now is completely effed by this behavior. So what happened that when they were merged with McDonnell Douglas in the 90s, they were saying that, oh, now we will just focusing on core competencies. So in aviation industry, okay, they are not focusing on engines, because engines are manufactured by GE and by other suppliers like Rolls-Royce, but still you have to focus on design, you have to focus on wings, but they started to outsource most of their production. But the reason of the recent struggles of the last 6-7 years now is that most of the production was outsourced to Spirit. And Spirit, so they are in a complete monopolistic situation here, because their sole vendor is Spirit, who manufactures all the bodies and the bodywork and everything is made by them. And after that, Boeing only integrates all the components which is provided by the external suppliers. And Spirit obviously was pushed down, so their margin is close to zero. So some positive zero number was always achieved, but they have to go for always the cheapest solutions, which can be dangerous if you are manufacturing really expensive and really complex assets. So Boeing started to fall into this manufacturing hell during the last 7 years, because they had to move many people to Spirit, not just for quality checks, but practically reworks. So Spirit did the job on the whole body of the future airplane, and then Boeing crew, who supposed to be there just for quality assurance, had to go through the whole asset again before accepting it, because still we can see that there are many hiccups later on, because they were not careful enough to find all the problems. So one famous near disaster event was when they realized that the backside, the tail section had wrong connections to the remaining, to the forward tubing of the airplane, but they realized it once all the stuff behind or before the tail section was built in. So you know that when you are entering Boeing airplane from the back, there are always these storage facilities with microwave oven and everything. So all this stuff was already in this place. Once they realized that no, we have to take this out, we have to check all the structure behind it because there were weaknesses. So this looks really nice, but if the vendor is not careful enough with quality assurance, if you are too aggressive in pricing, and then we can face problems. So also there can be collaborative models. So vendor initially builds and operates the center, and later on, once we can see that okay, this one is working, then they are selling this location to the parent company, or assisted captive model. So vendor assists the parent company to build the center, but actual work is performed by the parent company there. Joint venture model when they are just building it together. Yeah. Backshoring motivation. Usually this is managerial error related stuff. So they went there, they had high ambitions, and after that messed up completely everything. And they have to relocate stuff. In this case, the crazy situation can be, I had friends who told me their personal experience that they had to bring back stuff from faraway locations, and obviously in this case the external vendor should teach your personnel how to do stuff. And then during this teaching in 2 months period, the new staff realized that the people who are trying to teach them, they had no idea about the procedures. So they made continuous procedural errors. They made invoicing in a terrible way. So at the end of the day, they realized that why this job is coming back in the new location, because this was absolutely a mess. And also, sometimes rising costs can obviously affect things. So we can see in clothes manufacturing that when I was in high school in the 90s, most of the clothes were produced in China. Nowadays, we can see that then it was moved to Vietnam, now it's Bangladesh. So also in case of shoes, we can see the same thing. So as wages are increasing, then different industries are moving in a different direction. Lower cost of energy in the West. Yeah. Unfortunately, right now this is not much the case. Okay, if you are checking natural gas prices on the Amsterdam market, now commodity markets are consolidated after 3 years. Still, the problem was that many first layer manufacturing, so I mean that, for example, fertilizer manufacturing. So when you are just utilizing natural gas and after that producing some bulk product from it, they were hit completely hard on the continent, but still surviving. But for example, glass manufacturing, half dead. So even in my hometown, one of the glass factories closed down, even if they are using locally made natural gas, but still natural gas pricing was killing them. Or right now we are facing also the trouble with the closure of steel mills in the region. Even if coal is mined in Czechia, coal, and also in Poland, so it's not just a problem that we don't have access to Ukrainian coal or iron anymore, or so the same thing from Russia. But this is much more deeper. It's related to technology. It's related to green transition, and it's also related that in the US, since the 70s, there was a huge technological change. So this so-called mini mill started to appear in the US, where you are just melting down scrap metal and remelting it, and they were able to do it with way cheaper prices, as a mass production compared to the usual steel mills, and now the same process is starting to catch up with the region, with the European market. And also in this case, you are not producing as much CO2 as if you are using coke and all the traditional methods to remove the oxide from iron oxide, which was put there originally by life or the early life on the planet, because otherwise iron was just floating inertly in the water without organic oxygen added to it. So, yeah, consumers' pressures on company the made in effect. Come on, nobody cares about this. I mean, in the journals, on the internet, it looks really nice. Just I never heard anyone relocating a factory because that one is absolutely expensive to somewhere else because it looks nice that made in somewhere. Yeah. So let's go to the other topic, taxation. So first of all, why we have all these masses? So first of all, there are two taxation models. One key principle is that where is the location of the business activity? So if the location of the business activity is in the area of the country, then we should ask taxes for it. But if they are doing it in a different country, then this activity did not happen there, so they were not realizing any margins, they were not realizing any profits on it, and as a result, we don't have to ask any taxes. So after that, the whole game is about that if we have high tax levels, high corporate income tax levels, that we would like to make their business activities or don't. So how and where the expenditures will be accounted. This is the key issue here, because we can manufacture expenditures quite artificially. So we can say that, okay, if I'm manufacturing this mouse, obviously I need this cover which comes off and all the things within. So this is a real expenditure. But obviously I have to pay for the design. So the design should be made somewhere in some office. Also I should pay for the software. So licensing should happen because still it has Bluetooth in it. It still have to realize that or register that I'm clicking on it, and the laser must go somewhere. So sooner or later we can see that, okay, license payment for software usage, and also using the design, and maybe also we have to pay for a brand name, because this was before I ruined most of it. I think it's related. It should be related to Asus. Just now it's not visible anymore. So they should pay also for Asus to use this trademark. So sometimes, or mostly, companies are using these three ways. Royalty fees are also highly popular to move or to create this half artificial but legal ways to create expenditures, which is for the intangible goods. And then this can complicate things absolutely. Yeah, and also some countries are saying that, oh, we don't care about taxation, so the level of taxes are really low, or they made specialized treaty networks with other countries. Now, at least the environment is that they are trying to remove these treaty networks, but still, tax incentives. So in the 90s, when you wanted to grab as much foreign direct investments as possible, many governments just were saying that, okay, if you are opening this factory here, you don't have to pay tax. And that was all. So this is how we were able to get, for example, Suzuki in 1990 in Esztergom, in northern Hungary, that governments are always saying that, okay, you can get tax incentives. Now it's illegal in the European Union to say that, but still, so you have to request for tax payment, but still you can provide tax incentives. So you can say that, oh, you can write off the initial investment costs, you can write off the building costs, or you don't have to build up the whole infrastructure. The government will does it for you. So when you are arriving, the roads will be built, or at least the roads will be built, or the infrastructure costs will be covered by the local government or some state-related agencies. So they are trying to do these incentives in more sophisticated ways, but still tax incentives are there. So for 5 years, for 6 years, you have these incentives, but this is always temporary. And unfortunately, poor Suzuki, they were saying them that, oh, you can get even a highway, and this highway is still not even built after 25 years on. So they landed at the end of 2 terrible railway lines. So all their supplies are still going through a railway line where the speed is limited at 40 kilometers per hour, and some small roads are going there. So, but still they are manufacturing there happily. Just, yeah, you should not trust always governments when they are promising stuff. Stability of tax laws. I mean, from year to year, tax laws are changing. The question is that the principles behind the taxes are changing at all, or they are just tweaking with some numbers here and there, or they are just coming up extra sectoral taxes. This became really popular after the 2008 crisis, when governments suddenly became hungry. Yeah. For example, this weekend there was a public vote in Switzerland that do they want to make property taxes on rich people. So they were saying that, okay, the proposal at least was that rich people above 800 million euros, I mean with properties like this, should pay 2% property tax. And after that, this vote failed because 80% of the voters said that no, they don't want to mess up the whole taxation system of the country. But for example, in Italy, they were introducing things like this. And also, I think in the UK, they are trying to implement something like this. So stability of tax laws, it can be beneficial. But non-tax factors like political, economic stability, availability of professional services, so we need lawyers, we need accountants, we need friendly banks who would like to provide you these services, access to capital markets. Obviously, you have to buy some assets, so you just not store their cash. Exchange control and currency restrictions, it's good if we don't have this. And initial information and recurring costs, it must be clean and transparent. And one relevant issue is no substantial activities. So in many cases, you can keep your money there without taxation, because you are saying that, okay, I was able to earn this in a foreign market, not at your market, but you are not able to sell even a chopstick or an ice cream. Once you are doing it, then you are considered as domestic actor and you have to pay taxes accordingly. So that's why we have to distinguish between tax incentives for indirect investments, when you are building a service center, a factory, or something like this, and when you are just storing there your hard-earned money. So or sometimes the combination of both, but still located in two different entities. So OECD tries to optimize all of this and tries to categorize this mess and make things more transparent. So they realize that no taxation, usually this is not the case. They are asking for some kind of a tax, but they are way smaller. So for example, in our case study in France, we have to pay 25% corporate income tax. This is really high. So if you are able to cut or remove 10% from it by some tricks, we can still save a lot of money. So that's why during the 2000s, many countries in this region tried to introduce flat taxation. So, for example, there were years in Slovakia where corporate income tax, wage-related taxes, and also value-added taxes were 19%. After that, obviously, later governments started to fine-tune, so now this flat taxation is not there anymore. But still, this multi-layer taxation system, which was present in Western economies during the 60s and 70s, mostly now they are crumbling and they are trying to simplify them. In this region nowadays, we just have one tax levels mostly because governments realize that if you would even allocate it or even jump to the higher tax segment, then if you have good accountants, you can remove this. And unfortunately, due to higher inflation, usually what happened that the middle class was pushed up to the high tax segments. So even when I had higher revenues in 1 month, then immediately I had to pay most of it as a tax because I jumped into the higher tax regime. So simplified taxation can have also benefits, not just for tax optimization purposes. Yeah, so how can we use tax havens? Let's go to the interesting things because, okay, there are different ways or countries listed here and so on, but let's see the schemes. So first of all, we can say that there is a parent company in the US, and then they are just creating a company which is responsible for the European market. So let's say we are talking about Google. Google makes its Irish company, and then this will be responsible for providing YouTube Premium, Google Drive, and all the Google services for us. Google One, for example, for business. And obviously, in this case, they need to operate a data center here because, especially nowadays when EU is really strict in data protection. So in the past, through cloud services, you were just allowed to go to the US market. Now, even cloud services are necessary to kept within the EU boundaries, so you're not just able to move it to anywhere. So the cloud is a bit more limited. And the second thing is that you have to keep there some service centers for accounting, but they need still the ability to use the trademark. So still they have to pay trademark using fee for the parent company. If they are profitable, obviously they should pay dividend, and also they have to pay license fees for the different softwares made by the parent company as well. So we have 3 different payments. But in many cases, we can say that it's easier to ask for royalty fees. So we don't want to pay dividend for the parent company because in this case, it will be taxed at the level of the subsidiary. Then after that, once it arrives back to the parent company, then it will be also realized as a revenue, then goes through the whole profit and loss statement, and a second dividend will be paid to the investors finally, but again, a second corporate income tax will be added to it. So now we are taxing twice. And also, still, you need investments. Maybe you would like to buy foreign entities in the European Union. So still you need some cash reserve for not just for day-to-day operations, but also for expansion within the EU market. So that's why it's much easier to say that, okay, there is one subsidiary which supervises the EU market, but after that there is a second subsidiary which is the owner of the trademarks and all the other stuff on the European market as an agent of the parent company. So they are just collecting all these royalty fees and all the license payments and everything. And it means that they are creating such expenditures, artificial expenditures, that at the end of the day, the first subsidiary which is providing the services and collecting the revenues will not generate much profit at the end of the day. So you are still, it's elegant to say that, okay, the efficient tax ratio will be 4%, 2%, something. So you are still paying taxes for the state, just with limited capabilities. And after that, the second company will not do anything. So they don't, usually in this case, they don't have personnel. They are represented by a lawyer. There is no management, so there is no substantial activity within the borders. What they can have, that they are just sitting on the huge pile of cash which is growing. So if this scheme is operational, then you just have a foreign piggy bank which is expanding without taxation. And if you need this money, you can transfer back home anytime if you want, and then after that pay tax once you used it, because this will be other revenues or considered as other revenues. So sooner or later it will go back. But if you would like to use it for acquisitions, then you can just use it for acquisition, or if you need any investments. So Ireland, for example, has this double Irish scheme where if you have this service center, as I mentioned before, here, then if it's located in Ireland, then you can do a secondary agency company with all these intellectual property rights assigned to them, but they can be foreign tax entity, or they can have foreign tax entity. So they can operate that they are taxing according to foreign tax law, even if physically they are located in Ireland, their money is invested in Ireland, or kept it at least in Irish bank accounts, but they are taxing by US tax laws or whatever they are choosing. Obviously, in this case, everybody is located suddenly in Bahama Islands, or they are using this tax havens for no minimal taxation. Or, for example, Cyprus was also really popular for this case, or Malta. So, why is it good for the Irish government? Obviously, because first of all, they can lure in many service centers because of this. And the second thing is that this money should be invested somehow. So this money will land in the Irish banking system, which will be taxed at the end of the day. And also this money will land in Irish government bonds, which are nice because the Irish public debt is big, because they had to bail out the Irish banking system during the 2008 crisis. So this is an ATM. Obviously, other European countries were really mad about this. So when Ireland was bailed out by the European Stability Mechanism in 2000 or after 2004, they were trying to force them to implement changes in the double Irish scheme, and somehow they were not able to do that. So today this is working nicely. Or also we can use offsite pricing to cut some tax payments, because if we are importing from somewhere, let's say that cheese from Holland, Netherlands, then we are just selling this cheese at first to an intermediary. Obviously, this is also our own subsidiary, just in a non-transparent economy. So we are selling it for some money, and after that, later on, we will selling the same product to our parent company, and in this case, at least some of the profit will be just kept in the tax haven entity. So after that, due to Panama leaks, we can find many examples how Apple try to secure some of their revenues, or Google try to do the same thing, or Nike, or Walmart is really hardcore in this one. So you should report all the foreign subsidiaries in the SAC quarterly and annual reports. Just somehow they are always forgetting to report some of them. So Panama leaks provided information that they forgot things. It happens. Also, we can see the scheme of Uber. So that was the case until recent years, because now we have the global minimum tax, which is quite funny because right now this is implemented today. So people are compiling the reports since October. They were changing all the reporting structure during this year. So this is where all the big fours can earn a lot of money, because literally they are selling Excel sheets. So I will show it. So what is the concept behind this? OECD tried to, during the first Trump administration, the previous one, before the tariffs, they realized that they would like to get taxes back, because obviously during the 90s and 2000s, everybody was crying about that the US has this huge trade deficit. But why? Obviously, if you are relocating some production in foreign countries with FDI, then you are losing some of your export and you are generating some import. But the same company is responsible for the same thing, just from vertical integration they want to horizontal. And still, it should be neutral for balance of payments statistics, because come on, we relocated this production, so now it's an import, but it should be more profitable, otherwise we would not do it. So at the end of the day, dividend should come back. But obviously this was not coming back, because tax havens just started to store in this extra revenue, what was the incentive behind the whole outsourcing and globalization. So now it was time to lure things back. And they made this global minimum tax. So the concept is that tax authorities can check the parent company that are they paying the required minimum 15% corporate income tax everywhere. If not, then they can force the parent company to pay the missing amount of money at home. So you can say that, okay, you are paying there for this government, or if you are not paying there this government, then you have to pay for me. This is a really nice and acceptable system of thinking, and also they were trying to look for the big fishes, and so annual revenue limits were implemented. And also they were trying to focus on the net income, and also they try to focus on not just corporate income taxes, but all the municipality, local, regional taxes. So all the taxes all together was the concept, because tax systems are changing from country to country. So it would be impossible to harmonize this because of differences among countries or even regions. So yeah, that was simple. And obviously in this case you have to report all the positions. So now they cannot do the previously mentioned things that Walmart just forgot to add some of their subsidiaries into their reports. Now they cannot do it, so they have to report all the jurisdictions. At least right now this is the law, then later on we can see that what happened, how biased things became. But what we can see here, that they are trying to calculate the excess profit. So what is the accounting profit? Then they are taking this substance-based income exclusion thingy, which means that this reduction component is that they are taking payroll expenses, so salaries, 5% of them, and also 5% of carrying value of tangible assets located in the jurisdiction. So all the physical assets which is located there, 5% as well. So at least they are trying to say that, okay, we will not fine so much if you are employing people there, and also if you have physical assets there. So again, they are trying to rule out cases when you are just building a piggy bank, not without any real operations. So that's why from accounting profit, you can correct it with physical assets and people. And but after 2032, this will start to decrease annually, and it will be eliminated. And if we have any excess profit, then it will be taxed. So the effective rate must be this thing. And if it's not paid by the subsidiaries, then it must be paid. So let's see the industry. Because this is really nice, but obviously so the whole regulation what I was talking about is available at the website of the OECD. They have beautiful graphs and so on. But if we are checking the rules, there are obviously qualifying income inclusion rules for a set of countries, and also there are safe harbors. So what is this safe harbor? Go away. So this is a nice way. We cannot say they are abusing the whole system, just fine-tuning it. So suddenly we can see safe harbors where you are not harmed as much if you are operating in Barbados, Belgium, Austria, which is the next one. Yeah, obviously Czechia. But the whole European Union, Liechtenstein. Where is the other washing machine? Where is Cyprus? What happened with Cyprus? Come on, guys. Oh, it's so sad. Okay, but we have Switzerland, so still something. Or Ireland. So still we have to be careful that the washing machine should operate. Just after that, they added Turkey or Vietnam, which was not that popular. There is a list of countries which were popular in the past. So Singapore. Singapore is also not there. This is so sad. Sri Lanka. Sri Lanka is really strange. Arthur C. Clarke, who was a really famous sci-fi author, now he died, but he, for example, lived in Sri Lanka because if you are earning revenues from publishing abroad, so from royalty fees again, from publishing as a private citizen, then you don't have to pay taxes in Sri Lanka based on this. So yeah, but we cannot see Turkey or Vietnam here. There are also newcomers in the business. So
In Norway, people, the taxes.
yeah, in Norway the tax levels are really high, so I have no idea how they were added to this list. So KPMG has this taxation table. So all the cookies. So we can see that corporate income tax rates. Yeah, Australia is first. But yeah, so this is always the tricky part. That's why I hate taxation, because you have to relearn it in each year, and also it's not just about the percentages, but the exceptions. So even we can see that, okay, 1/3 of the profit should be paid in, but maybe if you are operating in a specified industry, or maybe if you are realizing some specified revenues, then you can get tax exemptions that you don't have to pay this. So, okay, Hungarian case is different because it's 9%.
It's for business.
Yeah, this is for businesses, but if you are in sectors where you have sectoral tax, then this can be higher. Especially if you are in retail sales, then it can be even higher, so it can be additional 3%. So, and also municipal taxes, I know there. So that's also different. In Czechia, they are also increasing taxes because of the runaway public debt and public deficit, unfortunately. But which one is the Slovakia? Oh, come on, Slovakia. Now 24%. Even Fico. I remember when it was just 19% in the past. Now this 19% discounts are starting to disappear. So we are not just talking about the 15% for the minimum tax, but
According to this schedule, Hungary is
cheap.
the lowest.
Yes, the lowest. And it's still funny when people are crying that, oh, our taxes are so high. I mean, entrepreneurs are crying that the taxes are so high, but mostly taxes are on wages and on value-added tax.
Yes.
So value-added tax, these are the highest on the continent, yes, because corporate income taxes are the lowest. So somehow you have to balance things out for the fiscal budget, and and this was the realistic case or scenario, because the government says that small and medium enterprises will do anything to reduce tax payments. So on paper, everybody will be in losses or close to losses, and it was always a back and forth game between the companies and the tax authorities. So, and it's really hard to avoid value-added tax payment. So the tax base is broader, it's more robust against business cycles. So I can understand the reasoning behind that. Okay, let's focus on taxation of the consumption, because in this case the whole society will pay it, and not just some companies whose economic activity can be altered by accounting. But also KPMG has not just for corporate income taxes, but not here. Yeah. I don't want to talk. So there was another table where I was able to see that, okay, different value or other taxes. And also, this is just the corporate income tax. So there can be additional taxes on savings. So savings taxes. So if you realize revenues from investment activities, because this can be misleading. So it can be, well, for example, in Hungary, it's additional 10%. And if you are private entities, you have to pay also wage-related tax. Yes.
If you save
10% from the revenue. I mean, what you earned from the saving or from the investment.
like
So-
if you like your
Hmm?
you need to pay for that.
Yes. At
It's
the end,
opposite to my country.
Yes.
Because the bank paid to us.
Yes.
Uh,
20%.
no. So I have the bank deposit there. So let's say that they are paying 3% of interest, and after that, the 3% interest will be taxed by the government. So the 90% of the 3% will go to me, and the 10% will go to the state happily. Or if I'm selling, so I'm buying some shares and I'm selling it with 10% of profit, then 1% will go to the state as a tax. So
Only 1%.
yeah, because it's 10% tax. So I still can keep the 90%. Unfortunately, now they added also that I should pay wage related tax and also social contribution. So now people are forced to say that, okay, I can open a long-term investment account, and in this case I have to keep the money there for 5 years. I can sell and buy assets, doesn't matter, just I cannot remove money, because after that I have to pay tax. Or you can buy government bonds, and on government bonds there is nothing. No taxes whatsoever. In this case, you can finance the public debt as much as you want. So this is the reason why also the general population was pushed into the bond markets. Yeah, we can explore many things here. So that was the OECD. And if we are checking, sorry, European Union, don't forget about that. Also, European Union has their own website about this. They have video, obviously, the video is necessary. And practically they are citing the same stuff like OECD did, just in a different style. Yeah. And this is nice. Calculations will normally made by the ultimate parent entity of the group, unless the group designates another entry of the group. Practically, they are doing it on corporate level, and then the parent company tries to supervise this. Are there any exceptions? And yeah, so mostly they are not trying to do this. Are there any safe harbors? Yeah, practically the whole European Union, what we were able to see. And then there are two nice opportunities, so we can see that even in the case of Hungary, a week ago there were still saying that so it's required to file an advanced tax return and pay any potential advanced for the several days ago, but it was mentioned somewhere that the form for the advanced tax return is not yet available. And several important details regarding the global minimum tax is still unknown. Yeah, cool. So it had to be done, but it was still not done. And yeah, sorry, this was published in October. Just that was the deadline. But okay, this is not KPMG. The competition, if you are checking, obviously Deloitte, then they are describing the same stuff again. This is hard, this is, and so on. But there is somewhere a description about the product. So at the end of the day, somewhere on their website, they are saying that, oh, you can just buy an Excel sheet and after that you just have to fill up with information. This at the beginning. No, not the brochure. Sorry. This Pillar 1 and Pillar 2 modeling service. And then this is where we can see that this is just an Excel sheet. Describing. Highlights. So calculates the amount of pillars and so on. It's Excel based, so this is an Excel sheet. Upload the data through Excel files, allows nimble, flexible, and customized solution. Excel sheet. And simple inputs. Yeah, you have to type in numbers and identify columns and rows. And flexibility. But I have no idea. Develop scenarios. So why we have to develop it? So it's just a tax invoice. You just have to add numbers and not check it for different behavior. But okay, so it's nice to have. So this is right now the product which they are trying to sell on the market. So